Modest day, as we said today on the street. Joining us now to break it all down is David Sowerby from Loomis, Sayles & Company, Jeffrey Saut from Raymond James, Joe Bell from Schaeffer's Investment Research, also Warren Meyers from DME Securities, who's just finishing up trading on the floor. He's going to join us shortly. Jeff, I'm going to begin with you. You've been warning for the last several days that the market's overbought. So what's today? Is it a breather? Is it the start of what could be a downward trend for stocks?
I've been targeting the mid-July through mid-August as the first point of vulnerability for a meaningful pullback, and the first meaningful pullback of this year. It's more of a trading call than an investment call. My longer-term stance is I think we have a high degree of probability that we're in a new secular bull market. So it's more of a finesse call than sell everything and get out.
David, where do you see the market going from here? I know volume played a big role in the market this month. The Dow is currently up 4%. The S&P is up 5%. But it's usually when we have low volume that we see some of those big moves. Do you think that once, school's back in session that we're going to see a different story in the market?
I think stocks remain the compelling asset class, particularly when you look at it relative to traditional bonds, alternative investments, whether it's hedge funds, even private equity, given the liquidity nature, real estate. Stocks will be the place to be over the next year. I'd agree with Jeff. I think we're probably due for some type of hiccup, or call it a pit stop. The S&P is trading about 8 to 9% above its 150-day moving average. I'm not a big technician, yet when you get that type of air or space between its long-term technicals, stocks usually have a bit of a hiccup. And if we get that, use that as an opportunity to put that money to work into stocks, because I still think, quite frankly, over the long term, there's still the mistrusted asset class by both individual and even institutional investors.
Hey, Warren, I assume we have Warren with us now?
Yes.
Hey, Warren, so size it up for us here, right? It's a huge week. What are you guys on the floor and your colleagues down here thinking about?
Well, I think that's, first of all, with all the information coming out later in this week that everyone's focusing in on, I'll touch on it in a second, that's one of the reasons why the volume is extremely light today and we had very little movement in the market. We have the GDP number coming out, which is obviously going to be a huge focus. That comes out on Wednesday. And then we have Fed minutes also on Wednesday, and then the non-farm payroll on Friday. Those numbers are going to be huge. Each of those is very instrumental in the Fed decision on their policy. So there's going to be a lot of anticipation, a lot of anxiety going into the release of all those this week.
Best case scenario is what? I mean, what do you on the floor want to hear? Not only from the Fed, but there's going to be another debate as to whether, good news is good news for the rally or bad news, whatever. You know what I mean?
Yeah, I know exactly what you mean. I think from the floor's perspective, or certainly from a U.S. equity perspective, moderate improvement is probably the best news you can get. So if you have an unemployment rate that maybe doesn't move, but the number of new jobs moves up a little bit, that's the perfect scenario on that front. GDP, I think you're looking, if you can get 1.82% and that level, not near the 3 that everyone hopes to get, but not a terrible number. I think both of those give enough confidence that the economy is improving slightly, but not enough enthusiasm that the Fed's going to start to tighten. I think that'd be the perfect scenario.
Joe, we've seen a resilient market for the last 2 months, but a lot can happen at the end of this month with all the data that's coming out. What are you watching specifically, and what's your trade here?
Yeah, you're exactly right. You look back even last week, a lot of your other guests talked about potentially being overbought in the short term. We had several days where perhaps the market could have sold off and we could have had profit-taking control that market, yet every sort of sell-off was met with a bid there. I think that's encouraging, so I'm looking for some consolidation here. One thing not a lot of people are talking about ahead of these news events, short interest at its highest level since December 2012, so perhaps a lot of skepticism going into this week as well, which potentially could bode well for higher prices as they potentially cover those bearish positions.
Short interest might be up, but you have a lot of these hedge fund returns that are down. Arguably, some of the shorts aren't doing so hot in a market that is at 15,521 even on a down day. I mean, Joe, what do you think happens to that short interest? Do you think it comes down a bit?
Well, that would be the best case scenario for the bulls. What happens, it's just interesting. You have a market since June, July, it's been incredibly strong, and yet these short sellers continue to target this strong market. We've kind of seen this happen time and time again, especially when we have those short pullbacks. All the bears, whether it be short sellers or option speculators, they come out to sort of buy those hedges or hedge themselves for that downside volatility. To this extent, it hasn't happened, and usually what happens is they'll have to rush out to close those bearish positions, and it usually resolves itself to the upside.
Warren, if you look at what earnings have come in thus far, are we overlooking the importance of earnings this week relative to all of the central bank noise that's going to be out there along with the jobs report? You've got 130 plus companies reporting this week. Earnings have been, I think, okay, right? Not gangbusters, not terrible. Expectations coming in were incredibly low. What do we look for here?
Well, I mean, you're asking me, does the economic data basically trump the individual earnings that are coming out?
No, I'm asking you whether earnings actually trump all the other data that's going to come out.
Versa. And I would say, I think this week in particular, the economic data is probably going to win out. But again, on an individual day like today, where there was not much economic data, obviously earnings are going to go to the forefront and be the key indicator for that day. I would say I would agree with it that the earnings thus far have been okay. That's probably the best way to describe them. Not bad, not great, off of lower expectations. And I think tomorrow probably earnings are probably going to drive the movement again, given that most everyone's going to pull back a little bit and wait for this big economic data. So I think earnings will have a big impact on the market tomorrow. Come Wednesday and Friday, though, it's going to be economic data driven without a doubt.
Jeff, S&P